Okay, hi everybody. This is John, and today's stock, we're going to look at Cloudera Inc., symbol CLDR. We're going to look at their chart, their fundamentals, and their upside downside ratio. Cloudera Inc. provides platform for machine learning and analytics in the US, Europe, and Asia. The company provides Cloudera Enterprise Data Hub that allows companies to execute various analytic functions against a shared set of governed and secures a data in public and private clouds and data centers. That's a mouthful, okay? They do a lot. They also enable customers to streamline, simplify, and scale big data processing projects and optimize data warehouses. Cloudera delivers applied research in machine learning and artificial intelligence. With its modular software framework, customers can have shared data experiences. The company has strategic partnerships with Intel and NEC Corporation. Cloudera Inc. was founded in 2008 and is headquartered in Palo Alto, California. Okay, let's watch these two videos now on Cloudera's chart pattern and Cloudera's fundamentals, including their upside downside potential. Okay, now we're looking at the financial fundamentals for Cloudera. We only have 3 years of activity. This company has been around for a while, but evidently they went public in 2016. So we've got 3 years of financial activity. We've got a nice increase in sales revenue, up 121% over the 3-year period. However, down here, you're going to see a negative net income for each year. And this last year apparently was the worst year of the 3 years. But let's continue. Let's look at the quarterly. Here we have the most recent quarter ending October 2018. We'll compare it with the previous year of October 2017. Sales increased up 25%. That's a nice increase. Net income, however, yes, they generated a loss for this most recent quarter, but it was much less than the loss many investors had been expecting. So I think we're seeing a company here that is generating good sales, and they should be reaching profitability in the not too distant future. Now let's look at the annual, which include the cost of goods sold and the selling and admin expenses. Again, we see the increase in sales here, up 121%. Cost of goods sold increased, but not as fast as sales. So that gave a nice bump to the gross profit margin here, up 130%. Selling and admin also increased. And then we see the losses here for each of the 3 years. The gross profit margin percent bumped up just a little bit here from this prior year. Now let's look at the quarterly with the cost of goods sold and selling and admin. Again, we see an increase of 25% on the sales. Cost of goods sold actually went down, and that gives us a nice bump up here in the gross profit margin from 65% to 75%. Selling and admin expenses went down 3%. That's good. So the combination here, I think, with the reduction in the cost of goods sold, the decrease in the selling and admin expenses, plus probably some other financial issues, yes, they still generated a loss, but the loss was much less than what many had thought. So again, I think we've got a company here that's going to be generating some great sales, but equally important, their profits are going to go gangbusters. That's my opinion. Let's look at the balance sheet here. Balance sheet, they have no long-term debt. That's good. We can't calculate their return on equity. Their current ratio, 1.7, that's okay. They're generating a cash flow here from operations. And then over here, several years ago, they had no stock issued. So this is meaningless over here as far as the changes in the outstanding shares. That's all I have on the fundamentals here. I want to show you the upside downside potential. And here we are. This stock was studied on January 7 of this year at a price of $11.14. But what I'm projecting is a forward price of $18 a share to occur in the next several months. In my opinion, they've bottomed out, and I believe they're headed back up to regain some of the stock price that they had several months ago. So let's now take a look at their chart pattern. In my opinion, the fundamentals, the net profits that are going to be coming out. And I want to show you the chart pattern now and show you what might be occurring there. So that's all I have on this, and we'll go and look at the chart. Okay, now we're looking at the stock chart here for Cloudera. This is the 1-year chart. Over here you can see several months back, this stock was selling for about $22 a share, a little bit more. Then it took a big hit here, went sideways, tried to bounce back up. Then it's been on a downtrend ever since the big market pullback here this past October. Now, I've talked about not bottom fishing, but what I want to emphasize here is a particular chart pattern that I'm looking at, as well as the fundamentals, which we've already looked at. But here in this particular chart pattern, we've got this big drop here, and then more recently here it appears to be bottoming out. What I'm looking for is for this stock to pull back up based upon its increasing sales and net profits. And I'm looking for this stock price to come back up toward the $20 mark. If we were to pull this out here a little bit and show the next 3 or 4 months here, what I'm looking for again is this stock price to increasingly increase up toward the $20 per share mark, barring any major event in the world, such as what's going on with China and who knows what else. Okay, let me put this back here. Now I also want to show you a couple other things here. Here I've got the 50-day moving average and the 200-day moving average. Both are still in a downtrend. I do expect the 50-day moving average to begin an uptrend as the stock price moves up, and the 200-day will lag behind it. But at some point, both the 200-day and the 50-day moving averages should be in an uptrend, and only time will tell as to how sharp of an uptrend they'll be in. So you can analyze this stock, but if it were me, I'd maybe want to study this a little bit more and see what plays out in the market. Wait until these moving averages make a turnaround and head back up. But there's another thing here that I like. Down here, you're going to see the MACD. Here, the MACD at this point here corresponds to this point right here. What we're looking at is a negative divergence, and it's for the upside. As the stock price is moving down, the MACD is actually increasing slightly. Generally, this indicates the price will follow the movement of the MACD. So I think the metrics here are telling us that this stock is ready to make a rebound. So we've got good fundamentals. We've got some moving averages here that I believe will be bottoming out and will be heading up. And we've got the MACD here, a negative divergence, indicating that the stock price should go up. It's not a real strong divergence, but it's enough to be interesting. And this particular stock should play out very well over the next 6 to 9 months or so. Thanks for watching. This is John with Invest Wisely and Prosper. You take care now. All right, be sure to check out the Learning Center for other currently featured stocks. Thank you for your interest, and sign up for the monthly membership so you can continue receiving featured stocks every month. This is John with Invest Wisely and Prosper. Now you can return to the private Facebook page.